We have a president who tweets today that he's going to see Xi and talk about tariffs at the G20. The work that I've done have shown that the president is actually mistrustful of Xi and is ready to increase the tariffs to include the $300 billion, perhaps as much as 10%. Have you done the mathematics on what that might mean for Union Pacific?
Yeah, Jim, let me start by saying I personally and we believe the president is addressing the right topics with China.
Okay.
That it's been a long time coming to make sure that China does live up to the standards and spirit of the WTO and that they're held accountable to.
But you're saying that even though that can hurt your business.
I'm saying that because I think that's the right outcome for the United States.
Okay,
now,
that's important.
how we get there is a different story. I do think tariffs, and of the order of magnitude that we're seeing right now, 25%, I think that's going to ultimately damage the U.S. economy if they go on too long.
Okay.
The president's used them as an effective tool to get China to the table.
Right.
But I think we need to use caution as to how deep and long we use that as a tool, because it'll definitely create a problem with our economy.
Now, the president's people I talk to have said over and over again that it's actually because of, take your plastics business, which is on fire, that they'll bring manufacturing back, which would be great for Union Pacific, that the consumer really isn't going to be hurt, and that, frankly, to some degree, the Chinese are paying for the tariffs. Now, classic economics 101 says that that's a little bit of a, let's say, an ill-advised way to look at it. But there is a sense in the White House that these things are working, and there's no reason to keep them temporary until the Chinese change their ways, stop stealing intellectual property. You know the list.
Yes.
When you speak to the president's people, when you speak to in Washington, do you tell them that the American people could get hurt and that maybe we have to take it a little slower? What do you recommend?
Yeah, Jim, I actually have shared with the president that tariffs do ultimately hurt local economies and hurt our people. A great example, the state of Nebraska has a very large ag community.
Where you're headquartered?
That's where we're headquartered. And that ag community has been significantly negatively impacted by the trade dispute with China as China's gotten out of the market for U.S. soybeans. Right. 1 in 2 acres in the United States of soybeans is planted for export. And it used to be about 40% of those exports were bought by the Chinese. They're about 0 right now. So that means 20% of the crop has to find a new home. And what a lot of people don't think about is once you break a supply chain, other supply chains grow to replace it.
That's what I hear, that if they go to Brazil, you can't unseat Brazil.
Or if you unseat them, you might not unseat them all the way.
Right.
So you got to worry about that. Now, there are other impacts that go on the economy. You know, sometimes a tariff can mean the U.S. Domestic steel market is pretty robust.
Right.
Well, that's good. That doesn't mean all U.S. steel jobs are coming back.
Right.
The relentless pursuit of productivity and the reality of competing globally says a lot of those jobs have been lost to automation.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.